I'm Nate Lind, and I help people interested in buying or selling online businesses get the transaction done without the deal falling apart. If you're looking to buy or sell online businesses, then be sure to keep tuning in for more videos like this one. Be sure to subscribe and hit the bell for notifications about new videos and interviews. And introduce yourself in the comments. Are you a buyer or a seller? Enjoy the interview. Hey everybody, Nate here. I have a very special guest, a friend of mine, Garrett Gunderson from the Wealth Factory. He is the person that I send all of my friends to that have anything and everything about tax strategy. If you're not moving to Puerto Rico and doing Act 20, 21, Garrett's your guy. So for the rest of us that want to enjoy all the niceties of America, the good schools, and not have to mess around with picking up, uprooting our family and moving, Garrett's your guy. Garrett, give us a little bit of your backstory, and let's jump right into how can these sellers of seven-figure, eight-figure businesses position themselves for the lowest possible tax impact when they sell their businesses?
Look, I started in June of 1998 in the financial world, which means I was a product-pushing salesman of mutual funds and life insurance. That was basically it. And then the market went down in 2000, and that's when my journey really began, because I was like, you're never allowed to say, oh, this is guaranteed. And I'm like, well, what is guaranteed in the world of finance? And I really came up with four main solutions, tax being the number one, right? If you save tax legally and ethically, that's a guaranteed return. Second was interest, how people structure their loans, how they negotiate interest rates, like all that. That was the second thing. The third one was on the investment side. What can we do to remove unnecessary fees, hidden commissions, or anything that created drag on a portfolio? And number four was insurance. Where there's duplicate coverages or improper structure, there's lost money. So I really became an efficiency expert, finding where money was slipping through the cracks. And look, I feel like my great-grandfather came from Italy in 1913 because of excessive taxation and corruption, just to get to America at a time when 1913, the Revenue Act that brought our current tax system into play. So I'm pretty passionate about saving people on tax.
That's awesome. So, Garrett, we've got people that are watching this that are selling their businesses for seven figures, eight figures. We've got some nine-figure listings as well. And I've actually got just on the personal brokerage side, I've got a couple of folks that I've been talking about, helping them get their business listed. And one of the things for them that is kind of a stopping point is, well, I can enjoy, some income as the proprietor of the business. Why should I sell and deal with capital gains and that kind of stuff? So help me get them over the edge. What are some tactics people can look at if they've got a little bit of time? Let's start there. So let's say we've got a little bit of time to figure this out. And then if you've got any tricks for last minute stuff, or even, I think we've had a conversation before about how you can go backwards in time and fix things too. Let's walk through that.
Yeah, and let's quickly talk about backwards in time, because it's evolved quite a bit since we spoke last. There's been 3 IRS notices that came out due to COVID and the CARES Act and everything. And the main focus is something called net operating loss, otherwise, the acronym NOL. And in the new system, you can go all the way back to 2015. And if you had any years where you had a cap on what you could write off, because it was capped at 80%, plus there was AMT, alternative minimum tax, you can take years where you had higher cost and move those costs to years where you had higher gain and get rebates and refunds. So that's something that everyone should do before they sell their business, because it can get you a cash infusion right now. But the second thing is, if you are selling your business and you have time, the things I want you to look into is something called the 1202. So 1202, if you're a C corporation or become a C corporation that's been around for at least 5 years, but started somewhere in the 1980s, you have up to $10 million of gain tax-free upon a business sale. So it's obviously like you've got to fit in that you got to fit in that really small peg that says, yes, my business qualifies for that. But if you do, that's $10 million without taxation, and even improved tax rates above that potentially. The second thing is something called a charitable remainder trust. So a charitable remainder trust is any highly appreciated capital gain asset, like a business, you can donate to a charitable trust. And the way that works is it's a real 501c3 that you select and pick. But when you donate it, it could be before the sale, you get a tax deduction that's a partial tax deduction for what's the remainder amount they think the charity will keep after you die. So that's something you can write off in that year plus up to 5 years later against up to a certain percentage of your adjusted gross income, let's say like 30 or 50%. Then When you sell the business, there will be zero tax upon that sale because it's going to fund the trust. Now, while you're alive, you can take between 5% and 50% income off of that money, depending on your age and the underlying assets, because you get to choose how it's invested. And then when you die, the charity keeps what's left over, which the intention is designed for 10%, right? So a charitable trust has its restrictions in that, you can't just spend the money all the next day, and, you've got some of those formats, but you're the first beneficiary of the trust. The charity is the second beneficiary. So you actually get the enjoyment, and there's a bunch of different types of those. Charitable remainder unit trust, charitable remainder, like CRATs, there's all these kind of different acronyms. So depending on your age and your situation, you can kind of adjust. So that would be another thing. And you can even look at some donor advised funds that might be useful in this as well. That gives you a way to get some kind of tax efficient ways. But those are the things if you have time. The 1202 and the charitable trust are probably the most, the ones I would look at first.
How much time do you need for the charitable trust? Are we talking months, years? What's the scope of that?
We've seen it done pretty quickly. Here's the main rules. You can't have a letter of intent or hired your person to broker the business deal yet. There might be some ways around it, but that's just the general rule. The 1202, I don't know. It just depends on how quick your team can be at maneuvering certain things. But if you are kind of really late to the game, it's not as advantageous, but it is still advantageous as something called a CAPS trust, CAPS. A CAPS trust, even if it's under contract, even if it's about to be sold, allows you to kind of defer the taxes and take it over time. So it's not a big hit right up front, something like a 20-year time frame. And we've got great experts that know all the ins and outs. Think of me as like the 30,000 foot view, tell you kind of basics, and then we bring in the attorneys and the financial nerds that can get really granular and tell you how to navigate all this stuff.
Yeah, absolutely. And I know there's a bunch of kudos came from you joined us in my mastermind in May last year, and several people I know have been singing your praises. So those of you that are watching that are curious about how this part works, Garrett, you're kind of the one that taught me where you fit in the world, just like what you described is the overall strategy. Like you've got to figure out your strategy before you can start to get into the tactic levels. So what does somebody who engages your services, like what would they expect? Like how does life, starting to work in with, the Wealth Factory and Garrett's universe, like take us through kind of that onboarding process. What does that look like?
So we basically assess their situation to see the level of complexity and the type of team that would have to be built. Because, see, the Rockefeller family created something called a family office. And what it was they just hired their own financial firm that only worked for the Rockefellers, hence family office. But now you had attorneys, accountants, investment advisors, cash flow specialists, risk managers, all working under the same roof. Well, the reality is most people don't have $200 to $300 million it would take to have a financial team just work for them. So Wealth Factory decided, what if we were to build this for entrepreneurs that weren't at that level, but create what's known as a virtual family office? So we've got multiple accounting firms, we've got multiple legal firms, and we can work in all 50 states. And then what someone would do is, we're not a commission-based firm, or we're not an asset under management trying to tell them where to go put their money and get a commission. Instead, what we focus on is people give us a results-backed tuition is what we call it. We're going to give them results. They'll pay us a lot less than what their results are, essentially, to become their financial quarterback and build out that team for them. And so they'll be assigned one individual that helps them navigate that whole thing. And then there'll usually be anywhere from another 2 to 3 people on our team that will actually be part of that, which can have everything to do with, what the next phase is for them and what they're really trying to create, to things that they're doing to tweak inside of the next business, to make sure that the money that we find for them is reinvested properly. And so they go through an onboarding process where we usually do 3 one-on-one sessions to find out where they can improve their cash flow, look back at the last 3 years of their taxes, and do a little bit of education for them. And then on the other side of that, that's when we look to engage in a more, lengthy one-on-one type of structure where they know what we can perform and do, and we know who they are and what they're looking for. So, yeah.
Okay, so let's switch over to the buy side. Let's pretend, and you've got clients that are looking for acquisitions. What are some strategies they should be thinking about when they're getting ready to acquire a business? Is there any structures or strategies that you can share with us?
Yeah, there's several things that I highly recommend. Like right now, I think that the stock market is still heavily, heavily overvalued. And those publicly traded companies get this exponential multiple, where private companies, the multiple is much, much smaller typically. So we want them to move and liquidate and move to cash as much as possible. So if they have 401ks, simples, or SEP IRAs, we want them to roll it over to something self-directed so that money has a checkbook attached to it and they could move quickly on this. We want to make sure that, anything that they could do right now with the CARES Act, like if they can get an EIDL, an emergency disaster loan, that's going to be 3.75%, isn't predicated upon their credit score, and can have really long payback periods. Grab access to that cash right now, independent of whatever business you're buying. You're starting to gather those assets and build what I would call an opportunity fund, right? So you want to build that opportunity fund so the best business deals out there are going to get gobbled up by people that can move swiftly. I mean, the most simple analogy of this is, I remember coming out of the 2008 recession, we were looking to buy a home, and it was like 2011, 2012, and this home that had been, bought for 2.2 million. I was telling my wife, they want to sell it for what they bought it for, but it's not going to do that. Why don't we get it for 1.5 million? And we're 40 days in the negotiation. I have them down to 1.6 million. I'm like, I know we're going to get this. And all I had was a pre-approval letter from a bank. And another family came in that had cash and bought that house for the exact amount I thought it would go for, 1.5 million. So people that are in a distressed situation, cash, liquidity, and quick movement is king. So do everything you can to move to a cash position, because professional investors don't stay invested all the time. Before, in 2019, what we were seeing is the wealthiest people in the world, the reports were between 37% and 39% of their money was sitting in cash. It was sitting in cash because they saw the economic turmoil coming before even COVID, because 60% of the economy depends upon lending and consumeristic buying based upon getting loans. When that tightens up, we hit recessionary times. We're in store for major opportunity over the next 6 to 36 months. It's going to be unprecedented transfer of wealth. So whatever you could do to escape all these other so-called investments that are heavy speculation, because I think the future is going to belong to people that acquire business during this time. So you've got to just get yourself in that position, get access to that cash, and then minimize your outgoing cash flow by restructuring loans and getting lower interest rates and paying off things that are inefficient, like so that you have the ability to reinvest in these businesses to grow them once you get them.
Yeah, it's been really fascinating to watch the change in the buyer profile just in the last couple of months. We've got publicly traded companies that are never been involved in e-commerce before, interested in getting involved. Trying to add an e-commerce based channel to their business lines, because when the pandemic hit, everyone saw and immediately ran to the internet.
Looking good.
It is
the way we're interacting. It's amazing.
It is absolutely wild. So now there's this whole, there's a lot of really interesting new money to the game of e-commerce. So it is a fantastic time for sellers. It's absolutely a seller's market. For buyers, you got to get your ducks in a row. You need that opportunity fund, like you said. Get into as much cash as you can, because as you can imagine, if you're the seller of a $2.2 million house and you get an offer for 1.5 cash and 1.5 it's contingent on financing, you take cash every day.
Right. And look, retirement plans take 30 years to work if they work at all. This is something that if you get into cash, you could have it work in 3 years. And it's unprecedented. I am a get rid of everything else and get into cash so you can capitalize type of thought process right now.
Yeah, we've got some really fantastic stuff going on with the SBA. I know they're kind of tapped out right now because of the PPP and the EIDL, but they're also they're basically forgiving 6 months of payments for people who have current SBA loans, people who get SBA loans, and we do a lot of transactions under $5 million are using SBA financing. Probably through June, July, that's still going to be somewhat limited. But as July, August, the rest of the year starts to unfold, that's a huge opportunity for people. I think the credit requirements are like 660 credit score. You need to have some assets. You need to have some liquidity. A couple $100,000. If you're looking for a couple $1 million business, but there's never been a more exciting time to acquire businesses than it is right now, and there's certainly plenty of opportunity. So Garrett, any other, strategies or suggestions you've got for either the buy side or the sell side that comes to mind?
Yeah, your tax strategy begins the day that you think, I have a business. As soon as you officially have a business, you need to know your exit strategy from a tax perspective. Otherwise, you're going to lose too many things. And acquiring a business, investing in the past had always been a very passive activity. We hand our money over, we wait and hope that it works out. There's tons of financial people telling us what to do. But I just think that that's going to it's going to be problematic in a few ways. And I think it's important to say 10% of people get 84% of the gains in the stock market. A lot of that has to do with hedge funds that are selling short. So when the market goes down, they're actually getting a bunch of other people's money, and then they actually change their positions and move long when the market changes, and they've got full teams of analysts. And so the average investor is not going to get huge returns in the stock market. The second problem we're going to face in that is a lot of companies aren't going to make it to the other side of this, I think, really tumultuous recession. Part of it is we're dealing with technological advancement that makes really big companies slow and dangerous because they can't move with the times. And when they go out of business, they don't report that zeroed out return into perpetuity. They just replace it with a new company. So when people think they're getting 8% in the stock market, they're probably getting closer to 6 because of that, removal of that return and not showing the true nature of it. So instead, why not just evacuate all of that and invest in what you know? Because when we look at the multiple of major corporations, it's absurd. It doesn't make sense. But when you look at it on an EBITDA of a small company, there's a lot of deals that are going to make sense. And that's what I really would encourage people is to become more of the pros that sit in cash and then pounce when there's the right opportunity. And you can make money on the buy when you have cash because you can get better rates. Like even the building I'm sitting in right now is a little podcast studio at this cabin I have. When I was trying to buy it, there was multiple offers on it. And I still got it for a little bit less than asking price, even though they made full offer because I said I can close in 9 days. I just needed time for inspection and getting my cash into my bank account and getting it off to them. And here I am sitting with it. And I've even had offers on this place since I've owned it, and I don't have it up on listing, but people knew it was listed before. So cash is absolutely going to give you a major opportunity. And when you can buy businesses that cash flow from day one, cash flow is so much better than retirement plans, and making money on the buy is a much better philosophy than speculation over 30 years.
I've interviewed a couple other professional acquisition companies that are acquiring e-commerce businesses, and they'll put a product manager in place, and then go through the sequence of adding more and more. And it's fascinating to see that business model starting to take off, and I'm getting a lot of people interested in how that works. And there's some really big opportunities. Cash is king, definitely. Really excited to hear you comment on that as well. I can't tell you how frustrating it is to get mobs and mobs of emails, people that are looking to buy businesses, no money down. They're looking for cash flowing businesses, profitable businesses, and looking to put nothing into the deal. It's just ridiculous. Like it won't go anywhere with the seller. Maybe you can find some distressed deals where that's the case.
Like
but again,
someone's sick or dying, like it's rare, right?
Yeah.
Still, people with cash are going to get those first.
Yeah, exactly. And it's very difficult for it. And same thing, like one of the things I've noticed, with online business brokering versus real estate brokering, it's kind of the same deal. We've got, a large multiple listing service, basically us, website closers. We've got, 30, 40 businesses listed right now. We'll sell 80 to 120 businesses this year. We are like the MLS of online businesses, and businesses that get listed, they get multiple offers. They get lots of interest in it. Now it doesn't always drive up the price like sometimes real estate can. And then due diligence has a factor. You're starting to uncover, warts and stuff in the deal that has to settle out too. But it's not uncommon for us to see 50 to 150 responses to any listing we have. As a buyer, you have to set yourself aside, having a personal financial statement. I know that's something that, comes as a part of, what you do, making someone go through that, having that part, solidified, having some, where you can prove, what kind of liquidity you have or what access you have to financing. That will make an offer or at least the interest in a business stand out above somebody that says, I need to go figure out my financing.
All right.
Garrett, I love talking to you. I can't wait until we can have another live event. You get the crowd all jazzed. There's nobody involved in tax strategy, finances, financials that can rouse a crowd like you can. And it's always a pleasure to have you. Thanks again for the strategies that you imparted. Looking forward to seeing what comes from this. And for those of you that are watching, Garrett's the real deal. If you're not moving to Puerto Rico, he is the best person for you to talk to about tax strategies. So I would encourage you to reach out to him. We'll have all of his information available here. And Garrett, thank you very much for joining us again. I can't wait to see you in person.
Yeah, I look forward to it. Thanks, Nate.
Thanks for watching. If you liked this video, be sure to subscribe and tell me what you thought about it in the comments. Your comments encourage me to continue posting videos, and they give me ideas about what to post next. I read and reply to every single one. Also, if you own an online business and you're curious of how much it's worth, click the link below to get a free business valuation with a member of our team. Who knows? It may even be me you're talking to.